Good morning. Welcome to Member Focus Monday. I'm Christina Schaefer, Social Media Manager for HAR. I'm joined by 2019 Realtor of the Year, Mike Wong. Mike, welcome.
Thank you. Thank you for having me and inviting me on the show today.
Of course.
It's a pleasure to be here.
Yeah, absolutely. Thank you so much for being here. And again, congratulations on being our Realtor of the Year.
Thank you.
We're all really excited for you.
Thank you. It was a big surprise, and I'm still kind of getting my head wrapped around it. So
Yeah.
It's an incredible honor.
And we're anxious to hear your acceptance speech.
I'll work on that.
All right. Well, Mike, you are much more than our Realtor of the Year. If you could just start off by just introducing yourself so that we all know what you do.
Sure, absolutely. My name's Mike Wong. I'm with KW Commercial in Sugar Land. Been serving as a realtor been licensed as a realtor for about 12 years.
Mm-hmm.
My background's in architecture and development, so that's why I made the transition to commercial real estate. It's much easier for me. As far as specializations, I do a lot of investment sales, land sales, and leasing. And then as I've gone on over my career, I've added more to my repertoire and resume.
Very good. And you are involved with ARIA as well?
Yes. So I'm current chairman for 2019, and I'll be returning as chairman for 2020.
Very good. And that's excellent. Thank you for being involved. We really encourage people to get involved with groups like ARIA, or area networking groups in your area, like Fort Bend, like in your area, for example.
Yes.
So thank you for being so involved. So I wanted to have you on because as a commercial specialist, we wanted to hear your perspective and see what's going on out there in the field. As you know, most of our members that watch Member Focus Monday or tune into the HR On the Move podcast, they're residential, so maybe they kind of see what's going on in commercial, but don't really have a good in-depth understanding. So let's just start out, very general. How is the commercial market doing?
Commercial market's doing great. I'll say we're really blessed to be in Houston. There's a lot of factors going on that help us out, and right now it's low interest rates. We've got everybody moving to Texas, right? and for the residential agents, I'm sure you're seeing it, but the housing market's still strong. And so those are all the factors and catalysts for commercial development. That's what we look for and what drives the market out here.
Very good. Are there any sectors that seem to be doing better than others? What are some sectors that are doing really well versus some that are maybe not?
As far as sectors, the hot markets or the hot products are going to be retail and industrial in Houston. Land is going okay, and the one sector we're having trouble with a little bit is office. So I brought some statistics for that as well.
Okay. Let's hear them.
Yeah. Well, let's start off with kind of the bad, right? Office, we know there's a lot of office space that's been built and it's still vacant. So there's a lot of speculative development. Right now, the office market that's hurting the most is probably in West Houston, kind of the energy area, and that's because of oil and gas. We've had a little bit of a hit there. That's actually one of my key things to watch out for the year. But we're seeing some trends. I think nationally, the big trend is co-working space in office, like WeWork, has been all over the news for not the best reasons, but we don't have a lot of that in Houston. It really hasn't taken off here. It's only about 2% of our market locally. Okay. Overall, we're running about a 20% vacancy in office space right now, which is kind of high.
Yeah.
Putting that in perspective, we've got 231 million square feet of office space in Houston. We're adding another 10 million this year in new construction, so we'll be at 241 million square feet. Even though the market's slow in office, we've had $2 billion worth of office sales. It's down for the year, but we look at the big statistic that I just read was Scansa USA just had a record sale of $542 million for the Bank of America building downtown. So that tells me we're still getting record prices per square foot for our office buildings. Even though we're in a little bit of a down market, we're still an attractive investment city for that product.
Okay.
Yeah.
Well, good. What about some other
sectors? A few other ones, retail is one of our strongest points in Houston.
Okay.
We've got about a 5% vacancy. E-commerce is a big thing to watch in retail, how it's affecting store footprints, how it's affecting tenants, and how it's affecting landlords. We're seeing a lot. The biggest trend I'm watching in retail right now is construction costs have increased. And with construction costs increase, material and labor, we're seeing rent increases as well passed on to tenants. So what's happening is in retail is we're seeing a lot of our tenants are taking smaller spaces. So if you look around at the new concepts out there, restaurants have adapted to a fast food, casual, grab and go. Nobody's really doing this sit down, dine in restaurants anymore. Retail stores are taking a smaller footprint as well. And that's partially due to e-commerce and now pickup and delivery options, online ordering, things like that. Retail investments are the darling of commercial real estate. It's the most attractive thing we have, and you'll see the volume. We've got 3.2 million square feet of new retail space under construction. Houston has over 300 million square feet of retail space. The big thing that I saw in the news was Toys R Us is back in town, so that's a great thing, right? The big thing to watch, I mentioned, is e-commerce. So the key term that we use for retail is called Omni-Channel Retailing.
Okay.
And that's basically bringing together the integration of online ordering, curbside pickup, home delivery, the Uber deliveries, things like that, and kind of the good old-fashioned physical store. The most obvious examples are kind of H-E-B right now, and Target's kind of adapting to that model. So they're having some positive feedback and positive results from adapting. What will be interesting is how the footprint of those retailers will change with the e-commerce models, with the online ordering. Texas, we're known for land, and we drive everywhere, so we have these huge parking lots. With the online delivery and pickup, how is that going to change the actual square footage of that building and that parking lot? So that's something to watch.
Very good. Any other sectors that you want to touch on?
I'll kind of touch base on multifamily, industrial, and land as well. Multifamily, it's not one of my specialties, so I've been underestimating it for years, and that's probably a big mistake because I know the multifamily guys are doing really well right now. Multifamily developers, they're the most active land buyers in Houston right now.
Okay.
So they set the market for pricing and what goes on. There's about a 90% occupancy rate, even though they keep building. The good thing is we've got job growth. We got people moving here, and we've got a need for housing. So multifamily remains strong. We don't have the final numbers for 2019, but last year for 2018, multifamily sales for Houston hit a record of $6.4 billion in sales. 10X Commercial ranked Houston as the #1 buyer's market for apartment investors. We ranked number 4 nationally in sales volumes. There was a lot of demand from investment type funds such as REITs, institutional funds, insurance groups, things like that, seeking stable assets in a good market. We're ranked number 2 in permits for new development for multifamily. We're only behind New York City as far as apartments. Yeah, so we're doing great. If you build it, they will come, right? Industrial, you can't be in Houston without knowing industrial. 2019, we had a record year. They built 20 million square feet of new industrial space in Houston. Vacancies around 6.3% around the city. We've got the Port of Houston that kind of drives us, and we've got major industrial expansion going west towards Katy and Fulshire out there. Obviously, e-commerce is a big driver of that industrial product. We all like our Amazon Prime,
Right?
And we want it in 2 days or sooner. So with population growth and that industrial growth and that demand for consumer product, we've got to have a lot of industrial here. One key thing that I pay attention to, and it's just because it's some of my clientele, is with all the industrial, transporting all that stuff in. We notice a lot more trucking on the road and a lot more traffic. We've really minimized rail transportation in Houston. We've taken away a lot of railroads. That's one thing that my clients look for and we need, and so it's something that we hopefully will get back to and reestablish.
Okay, very good. So you mentioned kind of the energy corridor area in the office space that's available. What about any other parts of town? Are there any parts of town where you're seeing a lot of development or a lot of commercial activity?
We're seeing a lot of projects being announced. Hines has announced 2 towers in, I think, downtown Houston for new high-rise development. You've got the City Center Group, Midway Development, has announced a project downtown as well. So there's a lot of things being announced, and there's plenty of funding for it. So we've got a lot of exciting projects coming up around town. I think, if we're blessed to be in America, right? It's a land of opportunity, and I feel like Houston is kind of the gold mine of that. As far as new developing areas, what I pay attention to is going west towards Katy. You've got a lot of that industrial development. You've got Amazon, who just built out there. Igloo has been there, but then you also have Academy that's built a center out there, and Goya Foods. So it's going west for the industrial stuff. The big catalyst I see for development, I call it infrastructure development. And that follows kind of 610, which is our original ring, and then we built Beltway 8, which is another ring that we started developing around. The next big one is going to be Grand Parkway, Highway 99. So we'll start to see development out there. What I do like about that is there's a lot of people that own land that became instant millionaires once that highway cut through. So there's plenty of land, there's plenty of room for us to develop, and Houston's just kind of spreading out.
Very good. So if you have any questions for Mike, go ahead and type them into the comments, and we'll get to those questions in just a little bit. I have more questions for you.
Sure.
I do see that a lot of people are telling you good morning. They're excited to see you on. Great information. And they asked if you could just speak up just a little bit.
Okay.
Robert did already ask a question. What strategy would you suggest for small multifamily or an office space investor?
As far as what to look for, or as far as what to invest in, right now everybody judges a property by its cap rate. I think if you're looking for multifamily, it's obviously going to be cost per door that you're acquiring at, and what the market rates are to get your cap rate. Ideally, we're seeing about 6% across the market. If you're in a good spot, you're 8% or higher, which is kind of above the average. For office, get long-term leases in place with your tenants. Try not to have a lot of turnover, so you get a little bit more stable income, and it'll help you with financing and just your overall cash flows.
Okay, very good. So also on investors, you work with a lot of international investors.
Yes.
Is there any types of properties specifically that they seem to be more interested in others, or what is it about Houston that's drawing them here, do you think?
Sure. There's actually two types of international investors I work with. The first one is exactly what you mentioned, people looking to park their money. Maybe where they're from, they could be facing an economic or political situation where it can wipe out 20 or 30% of their net worth. So they're looking for something stable. They're looking for something that maintains and pays for itself. Typically, they look for things like retail centers, triple net ground leases, which are things like, I'm selling an Outback Steakhouse, your McDonald's, your Chick-fil-A's, and your Popeye's chicken type of things. They're looking for those national guaranteed tenants. They're looking at hotel buildings as well, and office buildings. So, they're trying to move a lot of capital over here, which is a little bit difficult right now. But again, they're trying to park capital and preserve asset. They're looking for things that are very low maintenance as far as management, and then on the deferred maintenance side with any type of repairs or any issues with that. The other type of investor that's international that we work with are companies that are looking to relocate here or expand here. One big thing I'm following in 2020 is the U.S.-China trade war. That's driving, believe it or not, it's driving a lot of my business. We've got a lot of foreign manufacturers from China. They're paying about a 40% to 45% tariff right now on their product. So they're starting to look here to open. What's good about Houston is, of course, we've got the port. We've got distribution across the country. We're an international city. And they're looking, one thing I've convinced them about on Houston is our workforce for those factories. You're able to employ 100 to 200 employees as you need, and we've got the public transportation in place to bring them to those factories that we're looking at. So the good thing is if they come, we'll create 200 to 300 jobs per factory that we can bring here.
Wow.
Yeah.
That's great. So got a lot of questions and comments coming in.
Sure.
Again, people thanking you for this great information, and Gary said congratulations on Realtor of the Year.
Thank you.
I don't know if you know the answer to this, but Luz was asking, what is coming for 288 south of Pearland in terms of commercial infrastructure?
Not quite sure.
Okay.
That's a market I don't look too much into. I'm mainly based in Southwest Houston, so I know the Sugar Land, Fort Bend area well, and I know the core of Houston well. Going out to those outer markets, I don't know too well.
Okay.
But that's where the city's headed. So
Yeah.
it's Pearland, all the way up to Conroe, down to Needville. We're really expanding out.
Very good. So Lois actually asked the exact question that I was about to ask you.
Okay.
She said, what's the best way for a residential realtor to get into commercial real estate?
The best way, get training. Okay. Find a mentor who does commercial real estate. There's really no faking it until you make it. The liability is just greater. Consumers are more educated now than ever. You've got, you can learn so much on YouTube. You can learn so much online, just on your own. So a consumer calling, they're probably going to talk to 2 or 3 agents, and they're going to know the difference in your skills and how you respond. So getting educated is the big step. Start subscribing to some of the data and tools. Commercial Gateway is one of the ones that we promote. And know your limits. When you run into a deal that you don't quite understand or it's above what you can do, don't be afraid to find a specialist. There's a lot of product I don't do personally that I refer out to other agents that are awesome at it.
Very good. And also, we do offer some classes. I know you know Mishka teaches a couple classes specifically for residential realtors that are kind of dabbling in commercial.
Yes.
As well, so commercial leasing and things like that. So definitely something that you should look into, the classes that we offer. But we also, do you want to tell us a little bit about the CE opportunities?
Sure. HAR and Commercial Gateway have the Commercial CE, which is commercial emphasis on Legal 1 and 2. I think that's a great program. Not only the education and the commercial emphasis on commercial, but you get to network with the people in there. I didn't make it because my license renews right before that class, but I'm probably going to take that mid-year this time,
Right.
Just to kind of get into it. There's a lot of online classes and local schools that teach commercial. It's important to learn the basics, and that's what you get from there. You'll get the language you will use, the basic financial concepts. That's where we get started, and those are some great classes. If you really want to take it up a level, look into CCIM. That's for the people who are mainly commercial practitioners.
And that stands for?
Certified Commercial Investment Manager.
Okay.
Okay. It's a NAR designation as well. You join, it's an annual fee, but it's the best of the best. It's kind of the PhD of commercial. And you get taught by actual practicing agents and brokers. So you get great information and good training there. I recommend traveling for it. Those classes are 4 to 5 days. And it's kind of hard to take a class and prepare for the exam and everything you need to do while operating your business. So take a little time off and travel and take those if you can.
Yeah, very good. So Maria asked, where are the investors coming from?
As far as foreign investors, a lot will be coming from Asia, a lot will be coming from South America, and a lot will be coming from Europe. The reason for that is, again, their economic stability, political climate. They're looking to preserve their capital. They're not, what's really changed with international investors is over the years, they used to invest West Coast and East Coast. What really put Houston on the map, and what I give credit for, is our direct flights internationally. Once we started establishing those, more investors started coming in, and they started buying products that, as people in Houston, we didn't think were the highest cap rates or the best returns, but international investors bought those for stability. So they've kind of changed our market a little bit. As far as investors for things like our apartment complexes and our office buildings, those are local national investors. Those are our teacher pension funds, our investment groups, our real estate funds that are traded through the stock exchange. They're looking for, again, stable assets. We're in a great city. We've got a great population growth, great job growth. So they look at those dynamics to kind of evaluate the products here as well.
Okay, very good. So yes, a couple people were curious. It was CCIM. Yes, thank you, Josephine, for clearing that up. So they were asking about, with the property taxes in Houston, I don't see much of the 8% Mike mentioned, and they asked what area you were talking about.
So 8% will depend on the product that you're looking at. You've got, when we classify products such as multifamily, you've got A, B, and C class. The A class is going to be about 4%. That's a brand new construction, highly amenitized apartment complexes where, one bedroom is going to cost you like $1,400 a month and run up to $3,000 a month in that same complex.
Right.
So those are going to be a lower cap rate because you've got a brand new building with less deferred maintenance and it's a brand new product. Your Class Bs and Class Cs are a little bit older. Your Class Cs are obviously in older areas with more risk, so you'll see the returns a little bit higher there. That kind of follows in retail as well. A lot of our retail sales I'm doing right now are what we call institutional investment grade. Those are the ones that are making about 5 to 6%. It's not a high return, but it's guaranteed for the next 20 years. Even if the tenant closes down or goes out of business, there's some contingency in there where if they go dark, they're still paying some rent.
Okay, very good. Gary asked, general question, how to deal with a potential eminent domain property along freeway feeders, etc., Department of Transportation.
I've dealt with that last year. The Department of Transportation was generous to us in Rosenberg. So get your appraisals, get your comps, and figure out, what it's really worth. We were actually surprised. We did eminent domain out in Rosenberg for a roadway expanding near some warehouse property a client just acquired. They actually paid a little bit more over market for that property. They paid for a little bit over market to relocate automatic fences and gates, redo drainage in the area, which was nice. They didn't have the big ditch by the driveway for the large trucks to get in. So definitely run your comps, get an appraisal on it. That's what I recommend to a lot of my clients.
Yeah, very good. Charles just said amazing content. Thanks for sharing, Mike. Do you have anything else that you want to add?
That's a brief overview of commercial. I didn't touch on land, but the main driver of land is kind of the multifamily developers. You've got, Houston, we've got plenty of it, but we're not able to make more. For a lot of investors who are speculating, I tell them, look along the infrastructure development, look along the Grand Parkway. I expect to have a good year for 2020. I think, the main things I'm following for 2020, or a few things I'm paying attention to because they affect my business directly, are interest rates. I don't think we'll see too much of a change there. E-commerce is a big thing. It's affecting retail and just the way we live and how we get our supplies. Trade war with China is directly impacting my business as well. And oil and gas. We're still an oil and gas town, and we're seeing the office market kind of contract a little bit because of it. So we'll see how that goes.
Yeah, very good. Looks like that's all the questions, but I have to throw in this comment. David said, Wong is a rock star. And we definitely agree. Thank you so much for coming on and sharing all this with us, Mike.
Absolutely. Thank you for having me. It's a pleasure to be here.
Absolutely. And again, congratulations on Realtor of the Year. We're all very happy for you.
Thank you. Thank you.
Well, that is it for this Member Focus Monday. Be sure to tune in next Monday at 9 a.m. It will be our last Member Focus Monday of 2019. We'll see you then. Bye-bye.